Hello and welcome to this week's live weekly trade plan, where we go through the financial markets and we look to identify weekly and monthly levels of support and resistance that we're going to be looking to use in the trading week ahead. But just before we begin this webinar, I would like to present a very exciting opportunity to you personally. So the Live Trader Room has been set up to offer traders comprehensive trading education, but most importantly, daily mentorship. So our traders can join us for 1 hour per day where we analyze the financial markets, we look to identify trading opportunities, and you can observe us trade our own live trading account. So the idea behind this is that you'll be able to get full access to our trade details but most importantly, our trading performance. So I'm delighted to say that we are currently accepting applications for places on our Trainee Traders Programme. Now please do click on the link below if this is of interest to you and you can find out exactly what's involved and what we're offering. Now for a limited time only, if you are successful in your application, we are going to be waiving the fees associated with a place on our trainee programme. So there is zero cost associated with a place and there is no potential for upselling or anything of that kind at any point. So this is a genuine opportunity, however it is subject to normal terms and conditions. So what we are looking for is genuine traders that are genuinely interested in learning how to trade financial markets. So if this is of interest to you, please do click on the link below, do submit the relevant form and one of our traders will be in touch with you over the coming days. So for now, relax, enjoy the rest of this webinar and we look forward to seeing you soon. Bye for now. Good evening everyone and a very, very warm welcome to our live weekly trade plan. It's Sunday the 12th of November. My name's Tim and I shall take you through tonight's webinar. So for those of you that are perhaps new to joining us, this is 60 minutes. This is a 60-minute live webinar and it's all about multi-time frame analysis. Obviously, whilst the markets are closed, this is important as it allows us to take stock of what's happening in the markets and what's happening specifically with regards to price, and it enables us to plan for the week ahead. So we'll be taking a technical look at weekly and monthly time frame charts and looking to identify the important highs and lows and genuine levels of support and resistance that we can use in the trading week ahead. So as always, we'll be observing our main 15 liquid global markets, plus any other markets you would like us to look at towards the end of the webinar. So just before we begin, if we could make sure that if we could put up our risk warning, please do read our risk warning. Just make sure that you are aware of the risks. It's just incumbent upon us to make sure we always start every webinar with our risk warning. So let me explain just a little bit in terms about the importance of multi-time frame analysis. It's a term that's bandied around quite a lot with trading educators, but there is some specific value to it. Firstly, as far as we're concerned, you can see more clearly what is happening and who is genuinely in control of the market. Sometimes if we're looking at smaller time frames, it's really hard to work out from a genuine perspective, you know, what is happening to that market and who is in control, or is it in just a prolonged period of consolidation? These are all important decisions that a trader needs to be able to decide. And looking at different time frames and looking over price charts over a much bigger time frame can really assist with that. Secondly, the larger the time frame, the more important the genuine level of support and resistance becomes. So if we are identifying levels on a daily time frame and we can scale up and look at them on weekly and monthly levels, then you know, the more prominent they are within those weekly and monthly levels, the more important that level actually becomes, and therefore the more confidence we have with that level. And thirdly, it can show you the important levels where a market is likely to move to as well. So it can become very valuable in terms of trade exit, in terms of looking to book in profit and things of that nature. Okay, so let's proceed then, and let's start by going through the charts. We obviously look at 15 major liquid global markets. We'll start with the dollar index. So as you can see, just looking at daily time frame, we're just getting a 2-week period of consolidation effectively. So we had the break above the 94.05, which is quite important. And if you notice, you see the market, okay, it's been bouncing off the weekly highs. We've got a couple of tops here around the 95.03 level, but the lows are really struggling to break what was the previous resistance level, preventing prices from moving higher. Can then, once you break through those levels, become levels that starts supporting the market. So that was roughly exactly the same price that buyers started to come in and started to buy this market back to the upside. But for all intents and purposes, at this moment in time, we are experiencing a sideways moving market. Now, we have been sort of slowly making this reversal here at the bottom. We have a structural failure. In fact, we have a couple of this break at the 94.05 level was the second sort of significant structural failure to the upside. And we're getting this sort of period of consolidation, which is not unusual. It's nothing to, as far as we're concerned, it's nothing for us to panic or freak out about. You know, for even trending markets all pull back. So it's from a psychological perspective, it's just looking to take that on board. And that's part and parcel of trading the financial markets. But for now, we're just getting this little sideways moving action. So let's see if we do get a break below the 94.05, then we've got a couple of decisions that we'd be looking to make. But as long as it's above this level, 94.05, then we are happy for the time being, and would then sort of expect, you know, continuation ultimately to the upside. And that has been the play since the end of the summer. And what we're reversing is this sort of major, since prices were above the $100 level towards the end of last year, we've just, as everyone knows, the dollar has just devalued quite consistently and prominently until the end of the summer, where we've got a series of double structural failure to the downside. So it's actually in a bullish state once more. So let's have a look at that on the weekly timeframes. And what we can see is, after a pretty downward moving trend, very bearish, breaking this ascending line and just looking to really drive that market lower. And it's very interesting for us how we observed the low. It made a series of lower lows, which is always quite interesting when you see this sort of setup. So what we became is a little bit expectant, basically, that we'd get a little break below the 91.86 before this market would start reversing. And if we saw reverses on daily timeframes, then we would be very interested in getting involved. So let me zoom out just a little bit more on the weekly. So this was the break before. We had a 1 week break, and we had a weekly low at this low, and we were anticipating for continuation, which never happened. And then ultimately we got a little bit of a structural failure here on the weekly time frame, which is quite important. And it also seems to be supporting price as well, that same level over the last couple of weeks. On a monthly time frame, we had 1, 2, 3, 4, 5, sort of 5 to 6 consecutive downward moving months. And let's say 7 out of 8 months, if we include these two candles, 7 out of 8 months were bearish in nature, until we got a little bit of hesitation, a couple of doji sort of spinning top candlesticks. It creates a bit of indecision in the mind of those that are looking to sell this market. And we were looking very closely at some buyers entering at this, during these periods of indecision, to look to drive this price higher. And so far it's playing out on a monthly time frame. We're only 12 days into the month of November, so very early days from a monthly perspective. Obviously, we are looking to trade a little bit of growth to the upside, so we do want to break this high. And the monthly high is exactly the same level as the high of last month. So we're looking at just the bottom left-hand corner there on the screen, guys, the $95.04 level and 95.035. So for all intents and purposes, it's exactly the same level. So it's just a little bit early in the month to just preempt, what direction that's going to go. So what we'll do is we'll work with the weekly levels. So if I zoom in a little bit more, and let's put these weekly levels in here. So I'm going to work with last week's low. So the last week low is 94.085 level. Whoops, excuse me. 94. Sorry, let me try this again. So it's the 94.085 level. So there's the low, and we'll still work with the high of 95.035. So a couple of very, very interesting levels. If we get a break of the weekly low, it would become a little bit bearish for certainly the short term. I suppose what you can technically as well, you can hopefully see this little sort of bit of price action. So if we do get a break down to this lower level, the 93.72, then it's all within the realms of being able to sort of stomach it, so to speak, with the expectation they might give us more opportunities for this market to start moving back up to the upside. So that's certainly the play for the time being, but it does obviously depend on price action and what it decides to do and how it decides to do it. Okay, so we work with those weekly levels, the high of 95.035 and the low of 94.035 effectively. Okay, so moving along then to the euro dollar. So obviously it's an inverse picture basically of the dollar index. So what's key for us is looking at these lows. It's provided these previous lows have provided a little bit of resistance just over a week ago. And we're very interested to see how this price behaves with those highs. Again, if we get a break above those, we're not going to start freaking out. We're going to try to stay nice and focused and nice and calm. The reason being is we've got a couple of major levels of resistance, potentially preventing price moving higher. And the first one being the descending line, let's say, currently on screen. And the second one is the 17.14 level, which is in line with these lows along here. And this became the structural break as well of our head and shoulders to the downside. So if price pulls back to this level, it might decide to give us a fantastic opportunity to take this market lower once more. So that's very much the play. It's kind of in the dollar index is an inverted view of the euro dollar. It does largely make up approximately 60% of the volume that we see in the dollar index. So which is why we actually choose to physically trade the euro dollar often over and above the dollar index. So that is the state of play. We're just going to watch very, very carefully. We've already, this is the third sell trade we've currently have in this market, but we are expecting this market to eventually roll down. We have a 14.5 level sitting in there, and that's the kind of area that we'll be primarily looking to take some profit, perhaps even the 12.5 sort of level as well, which is just a little bit below this level, but not a huge amount. So it's something along those kinds of levels. So we're just going to play the price action at this level, just in case we get a a complete breakthrough. If we start getting a move lower and this level, which happens to be our weekly low of 1573, if that stacks up and we start getting, if it attacks this level and we start seeing failures to the downside, like we've done on one occasion already, and it starts to break this ascending line, then that could be ominous. So whatever the previous highs are would then become, incredibly structurally favorable in terms of this market potentially moving higher. So obviously markets can move both directions. We will, and we do have, I suppose, a plan of action depending on kind of what happens to price. But for now, certainly for us, we can be nice and patient with this market. The weekly charts, just so you have a look, and I'll zoom in a little bit more detail. So we're getting a bit of bullish price action. Very interested to see these highs and see if they kind of hold. So what we'll do is I'll take note of the low of last week's candle at 1553. So let me change this, 1553. So that's the low, and we're going to sort of, I tell you what, let's put in the highs just so that we can, not that we are looking to trade this high, because like I said, we've actually got a couple of resistant levels just above. So I'm only going to put this in for consistency purposes. So 1689 to the upside, and I'll put this in 1689 to the upside. 89. There you go. I do need to just change the color. So when we look at weekly highs, we look for a nice solid green color, and when we look at weekly lows, we're looking for the red weekly low levels. Okay, so let's take this across then to the pound dollar. So nothing more since early October. As you can see, we've got 5, potentially going on 6 weeks of just consolidation. So when we talk about understanding market conditions, we want to know what has been happening. Are we trending, or is this price driving to the upside? Is it going to the downside? And obviously, if they're not trending, which is moving higher or moving lower, then they could be moving sideways. And that is the conditions in which you are trading these markets. So bear that in mind. So we have a weekly low of the 30.26 to the downside, and we have a weekly high, which we've had in this market now for quite some time, which is why we haven't been jumping in and out of this market. So when you can truly identify market conditions, you can identify and you can work with these weekly levels, and they can give you some real insight and real guidance when you trade. So we basically do have a directional bias. A break above 33.36 could mean we could be attacking these recent highs once more. For a number of bearish reasons, if we get a break below the 30.26, we think we could get a nice extended move lower. The reason why I say that is, and if I just zoom out a little bit on this, so we've got a nice ascending line there, and that would constitute breaking beneath the weekly low, would constitute a break of the ascending line. It would constitute a break of just this genuine level of support and resistance that's sitting above the 32.26. So the level is 30.38, and we've got 30.26 sitting below it, which is a weekly level. So a confirmed break below that level would constitute potentially a nice, interesting sell in that market. And it would also constitute a significant structural failure to the downside as well. So actually the sell trade below the 30.26 is really quite significant. It has a number of different trade ideas going for it, and that's what we like to do. We like to build up the case for a particular trade, and it gives us a certain sense of confidence when we trade these markets. And a lot of these, just to touch upon the psychology, a lot of these buyers that are hanging around in this market to see if this market moves higher will start getting out around this sort of price, potentially booking in profit, whatever the case may be, because we've been in and around these prices since, for a good year and a bit now. So that's what you got to bear in mind as well. We might be looking at a series of orders placed beneath the 3026, which could provide a little bit of a real drive to the downside. So that's the pound dollar then. So moving along, in fact, let's have a quick look at the weekly levels, because those are the levels that we are going to work with. So you can see the weekly levels, which is a weekly level from 6 weeks ago, and the high of 5 weeks ago are still intact. So those are the levels we work with. Just to show you the weekly, the monthly. So this month's price action is contained within those weekly levels. So it just shows the importance of those weekly levels and how it can allow you to just step back from the market without getting caught up in it, which is obviously quite important, essentially. So again, it's kind of a similar story, effectively, with the dollar yen. We've got this 3-4 week period of just sideways moving price action. We've identified, well, for quite a few, even when we got the break of the 12, sort of the 113 level just down here, it was not a trade that we could get into because of the resistance at the 114.44, and you can see how that's held up now over the last few weeks. So we're in this sideways pattern, so that's literally it's kind of the price action that we're going to be focusing on. So we're going to work with the weekly low of 112.95, but we're just, again, just for consistency purposes, I'm just going to move this level just higher. And I'm going to move that back up to the 114.44 level. So let me see, what's the high of this market? So we have the 114.72. Oops. No. Sorry. Do bear with me just a moment. Okay. Right. Okay. So let's change this green line. 114.72. It's important we're accurate when we trade these markets. Let's move this level up to the 40 level. So for all intents and purposes, those are the levels. It's just this platform sort of has a little mind of its own occasionally. So those are the levels we're going to work with, the weekly highs and the weekly lows. And that is the dollar yen. So moving swiftly on, again, same kind of story. So when we talk about the dollar, there's no need to get too excited about it, because as you can see, consistently across a number of markets, we're just in a period of consolidation. The problem with consolidation is it can prepare buyers to come into these markets as much as it can prepare sellers. So you just need to obviously bear that in mind. So you can see how the weekly low that we've been monitoring now for 3 weeks nearly, you can see how those levels have been stacking up. What I'm going to do is just put a level in above this high here on the 2nd of November. So the high of this market is 77.28. So I'm just going to put a level in there. So there we go. So that's the weekly high, and that is the weekly low. So we've got a weekly low of 76.24 and 77.29. So if we get a break of those levels, we may look to either buy or sell these markets, depending what's going on. But for now, just to be crystal clear, we have a sideways moving market. So unless you're one of those traders that trades intraday off these levels and, you know, buying and selling on multiple occasions, then, you know, certainly for us, because we trade daily time frames, you know, we sit back, we allow all the volatility. You know, this market can move sideways for as long as it wants. In fact, the longer, it's like a coiled spring. So the longer these markets can move sideways for, the more explosive the move is. And what you need to take into account is which direction this market is previously moving in, because this consolidation will reveal itself as potentially many opportunities for buyers to start coming in, to see if they can start driving the price higher. And when that fails, you often get a nice explosive move to the downside. So you always want to see the price action that comes before the consolidation, because from a statistical perspective, you want to go with the prevailing winds, i.e., you know, the direction in which the markets come from. So you would look for continuation. Now, that doesn't always happen in that manner, but more often than not, that would be the trade to look for. But don't get me wrong, we can buy this market as much as we can sell it. We are not committed to any of these trades in any particular fashion. We'll let the markets do what the markets want to do. But so far, so good. We do expect continuation to the downside. We are currently selling this market. So let's see over the next sort of week or so, if we get a break below 76.24, we'll be looking to see continuation to the downside. So that's what we'll be looking to trade. And we'll work with those levels. This is the Aussie dollar. So let's work with those levels and then just move over to the euro pound. Just looking at the euro pound, we are in a period of consolidation since early September. So that should help. That should sort of enable you to sort of look at these markets and truly sort of see what's going on. It has, I hope you would suggest as well, belief this weekly low here would be a significant structural sort of failure to the downside. Saying that, if this level holds and we get a break above these highs, then we could be arguing a potential buy trade as well. What I'm going to do just on a weekly level is just work with this weekly high, because that would be the first potential indication. It would be a monthly high as well. So zooming into this market, I'm going to just find out what the high of this market is, which is 88.87. So let's change this level in here. 88.87. You can visually see that level now. So again, a break above that level. It's also above the 88.80 level, effectively below it, or the 88.77. So a break above this high of 88.87 would constitute potentially a leg up to the 90.39 level before it would need to make some pretty significant decisions on it. And we're going to leave our weekly low at the 87.32, as you can see in here. We'll continue to work with that level for the short term. So taking that analysis over, and this is the way that the financial markets move. We can get a nice explosive move for a period of time, you know, with the market moving in one direction in a very clean fashion, and then these markets go into periods of consolidation, which is what we're seeing. So this is phase one, this is phase two, and at some point when we get a break, it'll either break higher, which would be the statistical probability that we'll get a break above eventually the 134.48, and that market will move higher. However, if that doesn't happen and we get a confirmed break below the 131.44, then we are just as happy to sell this market as we are to buy it. So I mean, that's the beauty of technical analysis. Okay, so with that information then, there's nothing to change. We have a high, and if I show you this on a weekly level, again, it's why we really like to have a handle on weekly and monthly levels, because all of last month's price action were contained within those weekly highs and weekly lows. So now we know, even on bigger time frames, that those levels have even more importance. So we trade a break to the downside or to the upside with a higher, with more confidence in that particular trade. Okay, so that's the Euro yen. So we have our beloved global indices, which are at all-time highs and storming away. So we have the S&P. We have a weekly low of 25.62, which we're going to leave where it is. It supported the market just on Thursday as well, as you can see. We're just going to work with the additional high. We keep doing this every single week, which just keep edging and keep pushing these markets higher. So let's do that and remain as consistent as we can, and obviously as accurate as we can as well. 25.94. So I just changed this price. 25.94. So there's the weekly high. This is the weekly low, and price is being driven higher by a relatively fewer number of participants, as that has been the case for the majority of this year. So that effectively hasn't changed a huge amount, and it's the same situation across the board. We have, even you can see how the prices were supported even on Thursday. You know, that weekly low of 23.260 level is clearly an important level. It was when buyers started to this was looking very, very bearish up to a certain point, and it needed to reverse off a particular level, and it was the weekly low, and you can see how precise and how accurate that is. So let's work with the weekly high then. 23.555. Okay, so those are the weekly highs, weekly lows. So if we get this market moving sideways for a period of time, our attitude and approach would be to stay nice and calm and composed, and then potentially look to trade the break either to the upside or to the downside. However, we are very aware that your global indices are in a pretty major bubble. I think that's probably fairly safe to say, and there's just a nervousness amongst traders in terms of how long this is going to persist for, and when the bubble bursts, it could be significant. Obviously, providing some incredible opportunities, I'm sure, in the pipeline, but obviously, it can have a really devastating impact on effectively people's lives, and that's the downside of these markets. So we're just going to work with the FTSE. We're just going to make a couple of sort of minor amendments to the highs and to the lows. So the high is 75.58. So I'll just make this amendment first. 75.58. So we're working with that level to the upside, and we'll work with Friday's low to the downside as well. So it's the 7,400, which is a nice round number. 7,400, and it coincides with these previous lows as well. In fact, what I'm going to do is just work with the low of the 25th of October. So it's actually 73.96. So 73.96. So let's put that level in there. Okay, so that's just being as precise as we possibly can. And the NASDAQ is in the same position. So let's have a look at this on a weekly time frame. So we're getting a fairly clean-cut doji candlestick off. Well, it's a bit on the messy side, isn't it? Sometimes you have these ascending lines within channels, and that might be providing a little bit of resistance at this level. So I suppose for argument's sake, let's continue to work with the weekly highs and weekly lows, and let's see how price interacts with these levels. So on the high side, we'll work with the 63.50 level. 63.50. Okay, and on the downside, I'm just taking note of the low, which is 62.44. So 62.44. So those levels are in there. So might be interesting, but you know, as we've been talking about for so long now, like any particular sell-off needs to be viewed as a potential buy. Although it's a little bit harder than what it sounds. But we'll definitely work with that low. We'll keep an interesting eye on the 62.44. Because if those markets, just to clarify, if those markets start to sell off and there's a very bearish bias or a bearish sentiment behind the market, they could sell off quite a decent percentage in a relatively quick period of time. So we always kind of want to be potentially ready to act, although you know, it's also bearing in mind that we are in all-time highs. So as a result, the trading conditions can often be a little bit more on the difficult side. Okay, the gold market now. So we were looking for opportunities to potentially buy above the 1285. Didn't quite get the satisfactory kind of move. In fact, the rejections previous to it all indicate to us that, you know, a buy trade is looking less likely. I suppose Friday's price action, you know, absolutely confirms it. And now we're getting a bit of a bearish engulfing the previous sort of body candlesticks for the previous 3 days. So we have a sell trade, but we've kept it below the weekly low around the 1256 level. So if we get a break of these weekly lows, then we'll be looking to take this market lower. And it would mean a major structural failure as well if we got a break of this weekly low of 1260, I think it is. So we're going to work with this low because we need to, just because of the price action. So let me take this off, and I'm just going to work with this this high here of 1288. So I'm just going to extend this ever so slightly. That's 1288 sitting in there, and we have the 1260 struck. You know, and this is a weekly low from back in early October. So that's the low that we're really focusing on in the gold market. Just to show you the weekly levels, you can see what's happening to price. You know, this very, very bullish candlestick was completely rejected the following week, and we like to look for momentum, and we ask ourselves when we look at these charts, where is the recent momentum coming? What's happening to price? And you can clearly see 3 significant, maybe 4 significant bearish candlesticks and 1 bullish. So really the odds are stacked on this market, you know, squeezing lower, and if so, there could be an interesting trade to the downside. So you're kind of looking for, you know, this kind of structural failure that we've seen previously. And this week here just happens to be the coincide with the election last year of Donald Trump. So, you know, it's quite a telling, you know, bit of price action. And if we see a nice sort of bit of momentum squeezing this price lower and pushing things lower, then we are absolutely looking to sell this market and see what sort of trade we can get on this market. So that's the gold market, and we've already amended the highs and the lows. So we have a weekly high of 1288 and we have a weekly low of 1260. So just a couple more markets left. We look at the crude oil. You know, 4 days of spinning tops and a bit of indecision, and a little bit of rejection to the upside, a little bit of rejection to the downside. So in terms of market conditions, we are for the time being just moving sideways. So this was last week's previous weekly high of 55.74. We had our this is another market we're buying at the moment. So we're currently expecting prices to move higher. We had a confirmed break of a historic level of consolidation, and I'll show you what I mean by that. So what you can do is, if I zoom out, you can see that the last time we were at these kinds of prices, $55 level, was back in July 2015. So it's around this sort of area back here. So it's quite a significant level. You can see the market sort of bottomed out there in January 2016, and we've been on an upward trajectory, let's say. We have had some very, very interesting sell trades when those opportunities presented themselves, but we're getting a structural break to the upside, and price is squeezing up to the, well, we're anticipating price to eventually squeeze up to the $62 level in the crude oil. So potentially an interesting trade there. We absolutely expect a little bit of volatility before it gets there. It's not going to go there in one straight line. You know, pullbacks are a part of trending, as you can see, as this market keeps moving higher. We keep getting these sort of multiple pullbacks, and that trend is likely to continue. So we have, so let's look at this market then on a weekly time frame. So let's work with these levels for weekly highs and weekly lows then. So the high is 57.90. So let me change this level. So the high is 57.90. So there's the high. And let's identify the low as well. The low is 55.76. Sorry, let me zoom in a little bit more for this one. Uh, 55. Sorry, let me take this level again. So we're talking about the 55.64 level. $55.64. So that is the weekly highs and the weekly lows then in the crude oil market. You know, when we have a look at this market and we look at it on a daily time frame, we could very well get a little bit of a pullback, even back to these previous levels. And if that happens, there's no sort of major need to panic as such. But the weekly low will be the first indication in terms of whether, you know, how deep the pullback can become. So we're gonna obviously watch it very closely. So what we've had is 3 back-to-back bullish months in the crude oil market, and we're anticipating, you know, perhaps a strong finish to the end of this year after a little bit of a turbulent, you know, the first half of the year was a bit of a sell-off. And now it looks like we're getting a bit of bullish price action with a little bit of sort of significant volume driving prices higher, and that's what we're looking to trade. Okay, so on a weekly time frame, those are the weekly highs and weekly lows. And just the last market then, we're getting this sort of downward trending market with now a little bit of volatility coming into the downside, which is quite interesting. We were looking for a very interesting break, potentially down to the $122 level. And we've identified the low as well at 124.70, which is exactly where the price has effectively closed. We do have these previous lows down here. So now I guess those become the major levels of support in this market. And if you get a break of these lows, then you could anticipate the price moving down to 122.60. So with that in mind, then let's have a look at it in a bit more detail. Let's work with the recent highs and these recent lows as well. So I'll just record the lowest low, which is 124.17. Yeah, so let's work with that low. So 124.17. So we work with that low, and I'm just going to just record this particular high, which is the 125.44. 125.44. Okay, so those are those two levels in there. So we have a weekly high of 125.44, meaning that could provide resistance to the upside. or if we get a break of those levels, it might provide us with an opportunity to buy this market. And the same happens with the weekly lows. It might provide a little bit of support around 124.17. If we get a confirmed break below that level, it might constitute a really nice potential sell trade. So that just about wraps up this weekly trade plan. What I'm quite happy to do, guys, as always, is take any questions if you do have those. If you'd like to follow us, please do follow us on Facebook and Twitter and LinkedIn. So the details are there up on screen now. And more than happy to take any questions that you might have. Please do post them into your chat box on the right-hand side of your screen. Or if you prefer to email us, you're very welcome to do so. We do have a few of you that do prefer to email us, so that's absolutely fine. Just email us at support@TheLiveTradeRoom.com, and we do get back to you as soon as we possibly can. So, and also as well, if there is any markets you'd like us to look at, I know we spoke last time about a couple of markets. So if there's any questions you have, or any comments to make, or any markets to look at, then now is your time to post it into your chat box. That's fine, Rob. Thanks very much for joining us. Look forward to seeing you guys next time. So obviously, if you do need to shoot off, that's absolutely fine. We will post those levels as well tomorrow in our traders private Facebook page as well. So you'll have all those details there for you. And let me see. Thanks, Barry. Thanks, Sua. Yeah, my pleasure, Barry. We'll see you next time. Okay, it looks like we're short on questions this evening, which is not a problem. We did have a couple of markets that we were looking at last week. If I can, Stuart is not currently online with us. Yeah, thanks, Sua. Yeah, you have a good evening as well, whatever's left of it. So we'll pack up now very, very shortly. There was a couple of markets a few of you guys have been trading recently, which there's a couple of very, very interesting setups. So there's a couple of commodity markets as well that are all beginning to reverse significant levels across the board. Obviously, gasoline is as well an energy, of course it is. So so the wheat market is making a bit of a bounce back. So soybean, which is something we've been looking at as well. There's one of the yen markets I was going to have a look at, but since Stuart is not online, then I'll wait until he is, and we can have a chat about it then. So on that note, guys, great, good stuff, Khalid. Feel free to email me tomorrow. That's absolutely fine, and I will endeavour to get back to you as soon as I possibly can. So on that note, guys, listen, thanks very much. The details are there up on screen. Support@TheLiveTradeRoom.com if you do want to email us. And just to let you know, this webinar has been recorded and will be placed in your members area. So if you do need to access the details again, you're very welcome to. And we look forward to seeing you all next time. So from everyone here at the Live Trade Room, enjoy the rest of the evening. Do take care, and we'll see you soon.